So you saved up for your dream home, you got your pre-approval, and you think you're all set. But what if I told you that there are 5 hidden costs that you need to know? These expenses could add thousands to your budget, and most buyers and sellers in Virginia and North Carolina don't even see them coming. So, before you get blindsided at closing, let's break down the top 5 hidden costs you need to know. Let's dive in. Before we get started, my name is David Totten. I am a licensed realtor here in Virginia and North Carolina. And my team and I, we get calls and texts every day from people just like you looking to make a move to this area, and we absolutely love it. So whether you're moving in 6 weeks or 60 days, give us a call, shoot us a text, schedule a Zoom meeting with me. That link is in the description below so we can help you and your family make a smooth move to this area. As promised, let's break down the top 5 costs that could cost you thousands of dollars if you're not aware of them. So the first we want to talk about, of course, is closing cost. What are closing costs, you ask? Well, I have a detailed explanation of this closing cost for Virginia and North Carolina, and I promise you it's lengthy, but it's informative, and it's just information that you need to know. So let's take a look at what those closing costs are in Virginia first, then we'll look at North Carolina, and then we'll do a comparison of the two before we get into our second hidden cost for today. So let's take a look at closing cost. So closing costs are those costs involved in closing out a loan. So those are your lender cost, your appraisal fees, and any your title searches, your attorney fees, all of those things grouped in because, of course, those people don't work for free. So let's start with looking at Virginia for buyer-related closing costs. And these are your loan-related fees. So your loan origination fee could be 0.5% up to 1% of the loan amount charged by the lender for processing the mortgage. Your lender's also going to pull your credit report, which will be $30 to $50. Your appraisal fee, which we'll get into later, but it ranges between $400 to $600, required by lenders to assess the home's value. And then with today's market, if you decide, you have an option where you can buy down your rate, or what they call discount points. And these are paid up front to lower your mortgage interest rate. Now, mortgages are trending downward, which is a good thing. But if you decide that you wanted a lower interest rate and you have those funds, you can buy that rate down. For buyers in Virginia, next are title and legal fees. So your title search fee. This ensures there are no ownership disputes or liens. This is very important for you as a buyer because you don't want to buy a property that comes along with baggage or, liens, judgments that belong to someone else when you're purchasing your house. These can range from $75 to $200 here in Virginia. A lender's title insurance protects the lender from title-related issues. Those are $500 to $1,000. And then your owner's title insurance, optional but recommended. I'm going to say recommended, and that varies based off of the home value. So your owner's title insurance is going to protect you just in case somebody's Uncle Bob comes along and says, hey, part of this property belongs to me. I want my piece of it, or I want to sell it. And then you have another issue at hand. Next is our government and recording fees. These are going to differ in North Carolina, but here in Virginia, your deed recording fee is around $50 to $100, and this is for legally recording the deed. And then you have a Virginia grantor's tax, typically paid by the seller but negotiable. Those are $1 per $1,000 of the sale price. You also have prepaid costs and escrow deposits. So your property taxes. Buyers often prepay 6 months to a year's worth. Now, you're only responsible for the time that you're going to own the house in that year. So let's say you buy the house in June. You'll be responsible for taxes from the day you take possession in June through the end of the year. Now, here in the city of Danville, property taxes are paid twice a year. They're due in July and they're due in December. So your homeowner's insurance is paid up front for the first year. That's $800 to $1,500, and that also depends on who your carrier will be. And you have your escrow deposit, which is usually 2 to 3 months worth of taxes and insurance. So those, as you pay your mortgage, these funds will go into an escrow account where your taxes will automatically be paid if you choose to do so. For our sellers in Virginia, this first line can be a little tricky. And with the changes in the laws, these numbers, these were prior, but your broker fees or your agent commissions, this 5 to 6% of the sales price split between listing and buyer's agents. This number is not set in stone. I will repeat, this number is not set in stone because agents have to negotiate their fees now on both sides of the deal. So that's whether you're the buyer's agent or you're the listing agent for the seller. Your grantor's tax, this is going to be different in North Carolina. Here in Virginia, there's a grantor's tax, which is $1 per thousand of the sales price, sometimes negotiable. You have a settlement or attorney fees. Typically here in Virginia, we use a title company. If an attorney is used instead of a title company. So that's that. Then you have your title transfer fees, $10 to $50, and seller concessions if negotiated, which are sometimes a buyer will ask you to help them cover their closing cost. Now, again, that's negotiable. You can agree to do so or not. With the market that we're in now, we're starting to see more buyers ask for closing costs and get it. Because of the way things have shifted with interest rates, inventory, and the like. So what we want to do next is look at North Carolina for our buyers. The only two key differences here are the title and legal fees and your recording fees. So your loan origination stuff that's the same. But in North Carolina, you pay an attorney to close your house instead of title companies. Those range from $600 to $1,500 depending on who the attorney is. You also have a title search fee, that's $200 to $400. Lender's title insurance, $500 to $1,000. Owner's title insurance is optional. I'm going to say recommended because you want to protect yourself from anybody coming along and saying this part of this property belongs to me, because mistakes can happen. Second key difference in North Carolina, your government and recording fees. Your recording fee is going to be $26 to $64 per document, which varies by county. So that's a more local issue or local cost for you if you're buying in North Carolina. The excise tax, which is different from the grantor's tax in Virginia, paid by seller but negotiable. And this ranges from, this is $1 per 500 of the sales price. Remember, in Virginia, this is $1 per 1,000. So a little more costly here in North Carolina, but we'll keep going. For our sellers, again, real estate agent commissions or broker fees negotiable. That 5 to 6% of the sales price, that was old language. That is, you have to work that out with who you're working with to help you. Excise tax. This is $1 per 500 of the sales price. Your attorney fees are going to be a little different in North Carolina versus title companies in Virginia. $600 to $1,500. Title transfer fees is the same. Seller concessions, again, work those out with the buyer. If you're selling a house, if you want to help pay closing costs, you can. If you don't want to pay closing costs, you don't have to. Hey, I know that might have been really brutal to have to sit through, but it's information that any buyer or seller in Virginia or North Carolina, honestly in any state, needs to know. Because how often do you get to sit down with an agent and ask them about all of these costs that could potentially cost you thousands of bucks if you're not aware of them? But we've gotten through closing costs. Now we want to look at our second cost or our second item, which is the home inspection. Now, what is a home inspection for? I give you three things. A home inspection is going to help identify potential issues. It's going to help save you money, and will help you identify any unexpected repairs. Now, how much does a home inspection cost? Whether either state, it's going to cost you anywhere between $300 to $500 depending on the size of the home. If you are buying a commercial building, expect to pay more, but $300 to $500 is typical in this area for a professional home inspection. Now, your home inspector is going to be a professional that has gone through rigorous training, and they have the know-how and the eye for identifying issues. Your home inspector is going to check everything from the roof down to the foundation. So remember, home inspections, when you work with me, are a requirement. I have a list of professionals we can use in both states, depending on where you're buying. And that's just one of those costs that you may not expect to be upfront. That could range you anywhere from $300 to $500. Next on our list is going to be the home appraisal. Now, we talked about the appraisal earlier when we're talking about closing costs, and that's again going to be one of those upfront costs you have to pay to the lender, and that's going to range you anywhere from $400 to $600. In my experience, I've seen them max out between $500 to $550. This is a requirement if you are getting a loan to purchase a house, or sometimes if you're looking to for an investment property and you're working with, say, a hard money lender or a private money lender, they'll require an appraisal as well, just to make sure they're lending you the money. They're not lending you more than what the property is worth. And this protects the lender. And it also protects you, because if the house appraises for more than the purchase price, guess what? Instant equity. And you already have value in the home. But sometimes appraisals come in less than the purchase price. And if that happens, lucky you as a buyer, there's area to renegotiate the sales price of the home. So for instance, if you're purchasing at $180,000 and the home appraises for $165,000, that's a $15,000 gap. Now, there are three options that we can take to satisfy the gap. One is, as mentioned before, we negotiate the purchase price down to $165,000 with the seller, and with the bank not lending more, usually I would say 8 times out of 10, the seller will agree to lower the price to the appraised value. And that is one of those addendums that we need to attach to, or extra items that we need to attach to the offer when it's made, that the home must appraise at or above the purchase price. The second option is you walk away. If you and the seller can't come to an agreement that this house is worth this, I offered you more, I don't want to pay more because the bank's not going to give me more, then we need to agree to terminate the deal. The third thing you can do, if you have the money and you just desire to have this house, is you cover the gap yourself with the $15,000. That's going to come out your pocket, but it gets you the house if you want it that bad. So, like again, appraisal is needed if you're doing a loan or getting hard money financing or private money. If you're paying cash, don't worry about it. Now, if you are a savvy buyer though, you still may want to have one. Those are going to again run you $550. The next item that we want to talk about, number 4, is our water and well inspection. Some loans require a 30-day test of a water sample, especially if the house is on a well. Are there any bacteria, from dirt, of course, in the water, especially if the property has been sitting for a while vacant and the water hadn't been running. And usually a professional will have to do those, especially for the septic. For the septic inspection, those can be negotiated on who pays for them. If you're a buyer, you can request the seller to pay, or if they don't agree, you can pay for it yourself. Those will typically run you, for the inspection itself, $200 to $300. But most septic companies are going to want to pump the tank so they can inspect the tank, they can inspect the drain lines, they can inspect the distribution box to make sure that everything is in working order. Now, to have it pumped, that's another cost. I've seen them go up to $700 to $900, but all of those items can be invoiced at closing. If you're in Virginia, to the title company. If you're in North Carolina, to the attorney's office, and you can avoid paying it up front. But if you're doing that water test, most water companies won't release the test results until that invoice has been paid, and that is an upfront cost. Sometimes you have to shock the well, or you have to pour bleach in the well, let it sit for about 24 hours, then run it off for about a half hour to an hour to get all of the bleach and chlorine out of the water to do that test. Those usually cost about $140 to $200 depending on where you go, but it ensures that your water is safe to drink, cook with, and bathe in. So you definitely want to have those tested. Again, these are a requirement for certain types of loans. FHA, VA, USDA are going to require that the water be tested and the septic be tested before they approve the loan. So those are the 5 costs that could potentially cost you thousands if you're not aware, and we don't want to see you caught off guard. So that's why we did this video for you today. I do want to run through our list one more time before I let you go. And those 5 costs again include closing cost, your appraisal, your home inspection, your water and well test, and your septic inspection. These items, if not addressed, could cost you thousands at closing and potential issues which could cause the deal not to close. So I hope this was informative. I hope you enjoyed it. If you are looking to move to Virginia or North Carolina, 6 weeks or 60 days, give us a call, schedule that Zoom meeting with me. That link is in the description below. Until we see you in the next video, take care. God bless. We love you. Bye-bye.